You're welcome to a brand new month of April and the market review program where we look at key developments in the financial and capital market as it relates to the economy. It's a new quarter, second quarter 2021, but we'd like to take a review of the previous quarter, first quarter 2021, to see the key developments in the capital market. What were the big stories or developments that shaped the market? And what will we expect to see in this new quarter? With me to have this conversation is Mr. Ebo Ayodeji, Head Retail Investments at Chapel Hill Denham. Nice to have you on the program.
Yeah, thanks for having me.
Yeah. Let's first begin with what was one of the big stories in the market, the final demutualization process sealed, or let's say signed, sealed, and delivered by the Corporate Affairs Commission and the Securities and Exchange Commission. That made the Nigerian Stock Exchange demutualized and now segmented into three companies: the regulatory company, that's the regulations company, RegCo, the Nigeria Exchange, NGX, and of course the real estate company, Wilco. It has been described as a singular move that will help drive competitiveness in the global market system and also provide more access for the market to be viable, access more liquidity, and of course transform the entire landscape. But for you, how significant was that development in the first quarter?
Okay, thanks. And I would say it's really very significant for us for this happening in the first quarter. For those that have been following the story, it's been a long time that we've always been talking about demutualization. And for that happening now in Q1 2021, I think is also very positive. And kudos to all the various stakeholders. When you look back, it's even starting from the National Assembly. They had to pass a bill for that to pass a bill into law for that to be able to scale through. Yeah. And before other angles and different AGM meetings that were held. So I think it's positive for the market. And in terms of competitiveness, like that you mentioned, yes, what we expect is when you look at it for a company that used to be limited by guarantee, even when you make profit, you can't be distributed, and even you can't raise you can only raise capital even within those that are subscribers or those that are members of that group. But now that is being opened up and is now a PLC, so for the exchange as one of the subsidiaries, would be able to, now they would be driven by competitiveness, profitability, because we'll be once they are listed, we'll also expect we'll be seeing their quarterly results. We'll be able to analyze them, and that is where that competitiveness comes by, because we'll now be comparing them to other exchanges in terms of efficiency, in terms of new initiatives that they are taking and how profitable they are. And now, even if they are profitable, and if they are or when they are profitable, they would also be able to distribute this profit. So people like me and you, we can decide and buy the shares. We can own shares if we see prospects in the Nigerian Stock Exchange.
Yeah, I mean, that's a good story. So it will encourage more retail investors to come in and, of course, excite even institutional investors too. So that's a positive, like you rightly said, and we hope that traction will continue. But we'll be looking at the second quarter to see the developments in this new dispensation, but very, very apt position and insight you gave there. But let's look at the fixed income market. Of course, last year it was a low interest regime, and the yields also were challenging. And this year we're still looking at that first quarter 2021, still that low interest regime. Of course, attributed to the approach of the central bank, which we will come to in the course of our discussion. But when you assess the fixed income market in first quarter 2021, why is it still lingering, this low interest yield environment?
Okay, thanks. And I would say that when we look at, if we try to review the first quarter, you would discover that the rates has improved significantly compared from where it was at the beginning of this year. So if you look at even for the Nigerian Treasury bills, where most investors also participate, we've seen the 364-day move from a low of about 0.7% this year to about 7%, and we still expect that to go up. You can see that that's very significant in terms of, so move from about 1.5% to 7% for the 364-day, and the 182-day, in which the first auction in January closed at 1%, and as at the last auction 2 weeks ago, it closed at 3.5%. So I feel there's significant progress, even from the bonds angle. For those that go, for investors that go long term, we've also seen that improvement in rates within the bonds auction. So you look at, we had there were three auctions in the first quarter. For the bond auctions, and it's holds monthly, and from the January auction for the 10-year bill closed around 8%, and for the 15-year bond closed around 8.7. So and currently, when you look at the March auction, the 10-year is currently closed at 10.5%. The 15-year closed around 11.5%, and the 25-year bond closed at 12%, which shows that improvement. That's at the auction. Even at the secondary market, average of about 6.8% in January is currently about 9.8%. So we've seen that significant improvement, which is a bit of comfort for investors that are reeling from the high inflation rate environment. Because yes, you cannot currently, with some of the investment, you can't really match inflation, but you can bridge the gap, which is what we are always telling investors. Try to see how you want to bridge this gap, because your purchasing power will continue to be eroded if you don't do anything about inflation. So I think by and large, the space has been, we've seen it looks more exciting, though at the beginning of the year there was little activity in the bonds market because of the expectation that yields would go up. So most investors stayed on the sideline, and they were keying in as they saw the yields improve over time.
So at least the rates improved, though we still have this low yield environment.
Yes, it's still not it's not reached the level pre-COVID, but we also need to be mindful that when it's also very high, it also has a negative impact on the corporates. Last year alone, the corporates were able to raise about 1 trillion naira in form of commercial paper and corporate bonds, because the interest rate was stable last year, 2020. And with the increase in interest rates, it may become irrational for them, or I put it, may not make a business sense for them to raise capital at very high rate, because we all know that there's also always a premium that corporates have to place on similar maturity for the sovereign instruments. So once those yields get to a level, then it will be a disincentive. We always talk about crowding out impact of the private sector. So if it's only government that can raise funds and the private sector too can raise funds, and they have to rely on just the bank for overdraft, and banks most times don't have that leeway to have very long-term funds. So I believe that there will also, we expect it to continue to improve, but it will also get to a level that it begins to have negative impact on the corporates.
Now, speaking about the commercial papers, we saw a lot of traction in first quarter. I mean, several companies coming on board to raise various commercial papers, and that even ties into leveraging the bond market. I mean, take example of Seplat, that's now raised the largest oil and gas bond issuance of about $650 million for a 5-year period, and also Dangote coming on board to 300 billion naira bond. It shows that the private sector is really participating more and leveraging these markets.
Yes, I think it's interesting that we have begun to see more interest compared to what we used to have in 2019, before 2019, in this market. And it still boils down to the level of the rate. So with expectation that rates would increase will continue to increase even in the second quarter, most of the corporates will also want to take advantage before rates get to a level where would be higher than would have negative impact on their profitability. And when compared to the rate at which they get funds in the bank may not be competitive enough,
Yeah.
then for most of them are trying to ensure that this is done within a very short period.
Very important.
So there are lots of corporates that have, yes, there are a lot of corporates that have that plan, that have it planned out for Q2. We'll see a lot of them trying to take advantage of this rate environment before it becomes unfavorable to them.
So, I mean, it's more about the fact that they anticipate the level of rates to improve from what is in the first quarter.
Yes.
So they can raise it, and it's not really a challenge for them, because in this period you need more funding or financing to expand operations. But it's quite remarkable the volumes we're seeing across the capital, commercial papers, and even the bonds. But let's look at something that has been a discussion point over time, and it has become very important. Leveraging the capital markets to liberalize state assets. It's still much anticipated. I had a conversation and I said, I'm looking at 2022, the stock exchange having a capitalization of $200 billion, at least for a start. And that can happen if we even see governments list some part of its assets in, like, the Nigerian National Petroleum Corporation, the Nigeria Liquefied Natural Gas Company, with the unbundling of the Transmission Corporation Nigeria and putting it to some viability. Some power companies also coming on board could help boost. And of course, by that time, the Dangote refinery should be on board and encouraged to come into the market. So I'm just talking about the time is now for government to really explore the capital market, to leverage it and list its assets. This has taken a long time, but this is the moment for the nation to take. And will Nigeria seize this moment? What do you see happening from the government side?
Okay, yeah, thanks. I think the first thing that any company will first look at before they get interested in the market is the appetite of the investors. So if we come in now, are we going to be able to raise new funds? I feel that with the new structure, we have more domestic investors directing the activities of the market compared to what we used to have. Based on the NSC data, I think it's about at least it's over between 60 to 70% domestic participation in the market. And for the government, I think it's a step that they should try, because it also helps to provide some form of transparency. When you are listed, when you are quoted, you would also be able to publish your reports. You have people can ask questions, and that would over time will build confidence. And most of these government agent companies, we believe that they would also be more efficient by the time they are listed, and they can be very profitable. We can see what NLNG is doing. Yes, though it's not listed, but we can see the dividend that accrues to the government on a yearly basis. So if we get some of these companies also listed and government still own the stake, it can even help diversify their non-revenue base, non-oil revenue base that is always a challenge when you check the performance of the budget. So we'll be hoping that government will seize this opportunity to begin to list. While we also want the way the economy is structured, it's also good that the market is also a replica of the structure of the economy. So we'll need more of this the services guys to list on the floor with the agri companies. We have only two, Presco and Okomo or Palm. But I think beyond that, even for the exchange on their own, and for Nigerian investors, when we look at developed clients, you see investors buy into companies that are making losses, but because of the potential for growth, they're not about dividend. So if the exchange too can see how they can encourage companies that though they are not making profits now, but there's potential for growth. I feel that investors would be able to take the risk. Yes, you see their results, you know they are making a loss, but you know in the next 3-4 years, these are a lot of the tech companies. They can come to this platform, and I'm sure that a lot of investors will be willing to take advantage of that. So I think there needs to be a structure that would also encourage a lot of those companies that we call growth companies to also come and list, and investors too will need to also shift from that perception of just buying dividend paying stocks alone, and to shift to a bit of growth stocks that has potential for growth, which is capital appreciation.
Yeah, Mr. Ebo, I think it's very clear. The Nigerian Stock Exchange has the growth board, FMDQ has the private markets, and also even the NASD role at its private market. So definitely they are understanding the need to encourage good companies, but from what you're saying, it's important that they synergize their efforts internally to create the enabler for them, and we hope to see those tractions in the second quarter. But as we wrap up now, the Monetary Policy Committee had its 278th meeting last month, and of course, it was an opportunity for the Central Bank of Nigeria to look at the economic activities and take a decision on the monetary policy rate. It did not change, but one interesting trend I observed was that the voting patterns was 6-3 in favor of retaining the monetary policy rate. This therefore shows that there's a thinking that maybe this quarter the MPC may consider increasing the MPR. Now, for you, what are your projections in that regard, and how will the monetary policy stand impact the overall capital market?
Yes, I think very interesting votes that we saw, so which also shows the thinking of the committees. So I think one major factor that most of the members will be waiting for in this quarter would be to see the Q1 2021, that's the first quarter GDP performance. Depending on how that goes, if we're able to see significant momentum, then we may see a major, we may see a shift at the next MPC meeting. But beyond that, even before the MPC meeting, we've always known that CBN has that leeway. They have other policies at their fingertips or instruments that they can use to direct interest rates. Without raising the MPC, we've seen that move in the first quarter with the from OMO rate move from 5% for the longer one to 10.1%, which sent a signal to the market. So we believe that if the CBN also wants, or the committee members also want the rates to move higher, they can also still raise the OMO rate, which will also signal higher rates even in other fixed income markets. So I believe that while the CBN is trying to balance between growth and inflation, and we know they will still be for pro-growth, and because we know we need to increase our productivity, we need to generate more jobs. We need government also, so that government too can earn more taxes and be able to do more things. But by and large, overall, this MPC will continue to focus on encouraging government to synergize their effort around insecurity, which is critical to everything. It's critical to food, it's critical to investment, and it's critical to the market. So once those, if that single major problem can be resolved, then we'll see a major boost in the market.
All right. Thank you very much, Mr. Ebo Ayodeji. You know that the capital market is the barometer of the economy, and how economy performs and what's happening there is reflected by the capital market. So we look forward to a very interesting second quarter 2021, and hopefully we will have this opportunity to review it again like we've done for this first quarter. Thank you very much, Mr. Ebo Ayodeji, always making out that time to have this conversation on the market. Head Retail Investment at Hill Denham. Thank you very much for the time.
Yeah, thanks for having me.
And that'll be all for today's edition of the Market Review. You can join our website, www.proshareng.com. Go to the right hand of the bar, scroll down, click on Capital Market. We have it all captured for you, different stories and developments happening in the market. We also have it covered, the equities, the fixed income and bonds. We also have the unlisted securities and the commodities market, all captured by ProShare. So all you need to do is to log onto that website to get all this information that you require. Thank you for being part of this show, and don't forget, in this period, you need to stay safe and take all the measures that ensures that. To come your way again, thank you for watching. Have a nice time.